Assalamualaikum and good morning. We are from group number 8 and we are going to present about the Rajhi Bank. This is our group members. The first one is SYAZRIL IZAIDI bin SUNAMIA. The second is Muhammad Salahuddin bin Muhammad Sukri. The third is ChenXing. The fourth is MAISARAH binti KAMARRUDDIN, and the last is Muhammad AIMAN AUFA bin Muhammad ROSELI.
Hello, my name is Muhammad AIMAN AUFA bin Muhammad ROSELI and my matric number is 281320. Okay, I will present about bank guarantee by Vitamin Ajil and Murabaha. Okay, first is bank guarantee. Okay, what is this product about? Bank guarantee is a payment undertaking given by the bank guarantor in writing at the request of customer applicant to pay the state sum of money to the beneficiary upon presentation of written demand. Okay, what is the Syariah concept applicable is the Syariah contract applicable is kafalah guarantee, a contract where the bank acts as a guarantor, kafi, where the bank will guarantee the customer mahful anhu project or performance and to pay the beneficiary of the bank guarantee and agree sum if the customer fails or default in performing his obligation under the contract or agreement enter with beneficiary. Okay, next is what do you get from this product, which is assurance or certainty of payment to your business counterpart who requires a payment guarantee. Next is payment guarantee for any Sharia compliant business trade either local or internationally, and the possibility to negotiate better terms and conditions of the trade agreement. Okay, the obligation is the customer applicant authorize the bank to debit the account which the customer maintain with the bank for amount equivalent to 100% of the bank guarantee amount and any amount equivalent to the non-refundable fees and charges, including tax, in relation to bank guarantee transaction. Next is the customer must ensure that all information or report in writing that is furnished to the bank does not contain any untrue statement or any misstatement of fact, and fully disclose in writing to the bank all material facts in the context of bank guarantee and its document. Next, the bank shall at all times be entitled to make any payment under the bank guarantee for which a demand has been made without further investigation or inquiry and need not concern itself with the property of any claim made by the customer or any other third party. Okay, the fees and charges that you have to pay is handling fee, issuance commission, which is the rate is RM 400 flat, and amendment fee RM 400 flat. In addition to the fee, what are the charges that you have to pay is for the avoidance of doubt, you shall bear all proportional fees, taxes, including but not limited to service tax where applicable, and out-of-pocket expenses incurred, and any other fees, expenses, or resources in respect of this product. And the last one is stamp duties as per Stamp Duty Act 1949, revised 1989. Okay, next is by Vitamin Ajil. What is this product about? This is an unsecured financing facility offered to meet your personal financial needs, which are Sharia compliant. The facility is offered at a fixed rate. Okay, next is the method of financing is based on commodity trading. Under this facility, the bank will sell an identified commodity, for example, crude palm oil, to you at the sale price, which comprise both the financing amount and total profit payable under the facility. The payment of sale price will be deferred over the financing tenure. Next is upon purchase of the commodity, you will sell it to the market through the bank for cash consideration to facilitate your personal financial needs. And the applicable Sharia contract is by Bitaman Ajil, whereby you are allowed by the bank to pay the sale price via fixed monthly installment over the financing tenure. Okay, what you can get from this product is minimum financing amount, which is RM 10,000. Maximum financing amount is RM 150,000. Next, the final financing amount approved will depend on bank's credit evaluation. Profit rates range from 9.31% to 19.02% per annum, depending on financing tenure and profit rate. And next, tenure range from 2 to 8 years. Installments equals to the sale price divided by the financing tenure in months. And the last one is installment due date is every first of month from the month succeeding the disbursement. And next is the fees and charges that you have to pay is processing fees, stamp duty 0.5% of the total financing amount, bursa transaction fee, actual bursa charge, takaful subject to the financing amount, tenure and age, redemption statement fee RM 10 ringgit per request, and annual financing statement fee RM 5 ringgit per request. Okay, next is murabahah. Okay, what is this product about? Commodity Murabahah Saving Account is a saving account with attractive and fixed profit rate that foster discipline of saving. The profit derived from the commodity purchase and sale transaction based on fixed profit rate determined upfront. The principal and profit of this product are protected by Perbanan Insurance Deposit Measure up to RM 250,000 for each depositor. And next is, what is the Sharia contract applicable? The applicable Sharia contract are commodity murabahah with tawarruk arrangement and wakalah bil ujrah, where the commodity is used as an underlying asset for the purchase and sale transaction between commodity traders, the customer via agent, and the bank. Okay. What you can get from this product is customer will receive the profit on monthly basis. The profit will be computed based on effective profit rate, which will be published by the bank from time to time as per the following formula, which is profit equal to purchase price times profit rate times 1 over number of day in years. Next is the fees and charges that you have to pay is dormant account, and advice is sent to customer advising customer to reactivate account. With balance up to RM 10 ringgit, account will be closed and the balance absorbed by the bank as fee income. Next, with balance greater than RM 10 ringgit, an annual service of RM 10 ringgit 60 cent will be charged until the remaining account balance are transferred to unclaimed money. The risk involved, which is the customer shall experience the typical risk associated with conducting a deposit transaction or when utilizing the ATM with any banking instruction.
My name is MAISARAH binti KAMARRUDDin, and my metric number is 275683, and I'm going to continue about the letter of credit. Letter of credit from Al-Rajhi Bank is necessary when you must let your seller know that you have the financial resources to import your items into the country. In international trade, the letter of credit is frequently used to remove risks related to the country of origin of the importer. It also acts as solid assurance that your seller will get payment for the goods or services that you have imported. So what is it used for? For importer, when importer use a letter of credit, they can ensure that their company only pays for products once the seller has supplied proof that they have been dispatched. Importer don't have to make any upfront payment or deposits to the exporter. It's also allowing importer to save money. The letter of credit demonstrates they are trustworthy to an exporter, giving importer quick credibility. For exporter, in the event that the buyer does not pay for the products exporter ship, the letter of credit serves as a form of insurance. Due to the fact that payment is guaranteed as long as the delivery conditions have been met, exporters are shielded from legal dangers. Additionally, a letter of credit can be pledged as collateral against working capital loans to assist exporter in fulfilling their order. So how it works? Payment to an exporter will be made in accordance with the terms of letter of credit, which describes those circumstances. In most cases, the issuing bank will act on behalf of its customers, which is the buyer, to confirm that all requirements of the letter of credit have been met before releasing the funds secured by the letter of credit. Next is Al-Wadi'ah Damana. In Malaysia, all Islamic banks provide three kinds of deposit products, which is saving accounts, current accounts, and investment accounts. There is no uniformity among Islamic banks in terms of how Sharia compliant procedures are used to supply deposit-taking products. All Islamic banks supply deposit products based on the concept of Wadi'ah, Wadi'ah Damana, and Mudarabah. Al-Wadi'ah is a contract between the asset's owner and the custodian for the purpose of safeguarding the assets on the customer's behalf. So it is a secure storage facility for precious things that offers a guarantee with a storage fee charged for each item housed to cover the cost of maintaining the contents. The debtor is appointed as the person in charge of the trust, and he has no legal claim to the commodities in his possession since he is compensated for his services in maintaining the property. If the items are harmed while in storage, the owner of the products is obligated to compensate the owner for the loss or damage that has happened to the goods. So how it works? It is a mix of safekeeping and assurance. The custodian will retain the item and invest or trade it. Profits earned from such action will be the custodians, not the owners. The custodian is also liable for any damage to the property. And if the owner desires the item, the custodian must immediately return it. Next is Al-Mudarabah. Mudarabah, which means sharing the profit and loss with the venture capital, is a partnership or trust financing contract in which one partner, which is Rabbul Mal or silent partner, provides money to another partner, which is Mudarib or working partner, in exchange for the latter's participation in a commercial enterprise. Profits are divided between the parties in accordance with a previously agreed upon distribution ratio. A loss means that both the Rabbul Mal and the Mudarib parties will lose the money they spent in the project as well as the time and effort they put into it. So how it works? When it comes to capital, one party, whether it be the capital supplier or the company owner, is responsible for financing it. Money in the form of cash must be used as the source of the first capital. Only the entrepreneur will do the real business. The funding provider cannot collaborate with the entrepreneur. The capital provider will incur the whole financial loss, while the entrepreneur will merely suffer a fatal attempt.
Hello, do you know what is working capital finance? Working capital finance is when a business borrows money to cover relatively small expenses such as day-to-day operations and payroll, rather than the purchase of equipment or real estate. There are four main components of working capital. The first one is trade receivables. It is also known as account receivables and is represented as current liabilities in balance sheet. The second one is inventory. The third one is cash and bank balances. The last one is trade payables. Okay, the next part is calculate for working capital. There are three calculates for our working capital. The first one example is working capital equal current assets less current liabilities, like this. Okay, working capital finance is used to fund your company's investment in short-term assets and to provide liquidity so that your company can fund its day-to-day operations, including payroll, overhead, and other expenses. For this one, which means sharing the profit and loss with the venture capital, is a partnership or trust financing contract in which one partner provides money to another partner in exchange for the latter's participation in a commercial enterprise. Profits are divided between the parties in accordance with a previously agreed upper distribution ratio. A loss means that both the rebel male and the middle parties will lose the money they spent in the project as well as the time and effort they out into it. For this one, how it works when it comes to capital one party, whether it be the capital supplier or the company owner is responsible for financing it. Money in the form of cash must be used as the source of the first capital. Only the entrepreneur will do the real business. The funding providers cannot cooperate with the entrepreneur. The capital providers will incur the whole financial loss, while the entrepreneur will merely suffer a futile attempt.
A very good day to everyone. My name is SYAZRIL IZAIDI and my matrix number is 264179. Now I will be presenting about interest-free accepted bill of exchange and Ijara. Let's start with the bill of exchange, also known as interest-free accepted bill. It is a type of commercial paper that constitutes a certificate issued by a drawer to another person, the drawee. This bill will be purchased and sold using forward purchase and forward sales agreements. Now let's move on to Ijara. Ijara is a contract of one party that transfers the right of using an item he owns to another party for a specified period of exchange. Al-Rajihi Bank also uses Ijara. It is their debit iCard. Debit iCard is a payment instrument which allows you to pay for goods and services from your deposit account at a participating and service outlets. For an Ijara contract to be valid, it must satisfy certain conditions regarding the following fundamental elements of the Islamic commercial contract. That is, A. The contracting parties, B. An offer and acceptance, C. The subject matter of the contract, and D. Consideration. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh and very good morning to everyone. My name is Muhammad Salahuddin bin Muhammad Sukri. My matric number is 273479. Today I would like to discuss with you about the three products of the bank, which is IECR, Qard Al-Hasan, and also the Al-Kafalah. First, IECR. IECR is to refer the export credit refinancing. IECR is the subsidies refinancing facility for the purpose of the promoting the export manufactured product, agriculture product, and also the selected primary commodities that have the significant value added, utilities, local indigenous resource, and also halal in the nature. There are two types of the ECR facility available, which is the pre-shipment ECR and also the post-shipment ECR. First, the pre-shipment ECR is used for the financing of domestic raw material input and also the overhead. 2. The post-shipment ECR is used for the financing of usences of the export. We move to the Qard al-Hasan. The Qard al-Hasan is referred to interest-free of loan. In Qard al-Hasan transaction, the borrower repaid the principal amount of the loan without interest, markup, or the share in the business for which the loan was used. The concept of the Qard al-Hasan is to assist the poor people offering a loan without any interest. The last is the al-Kafalah. Al-Kafalah is referred to the connecting of the one community to another, the resolution of the case. In Kafalah, one person joins another in undertaking a certain community. As a result, two persons become mutually liable of the fulfillment of the comparable agreement. Once again, Kafalah is closed, the loan supervisor has the power to guarantee the obligation from either the primary in-debt person or the underwriter. Kafalah can be sudden, restriction, and also the unexpected. In the quick, Kafalah as the insurance yields result upon the individual agree to become an underwriter. The agreement of the Kafalah may be divided into the two types, which is the individual and also the property. As the usury, a leader is not permitted to charge the debtor and also the additional money. Similarly, of the underwriter who does not provide any duty is not the permit to charge the debt holder. So that's all from us. Thank you very much and Assalamualaikum.